However, we never enter a trade based on the crossover alone. Now that all the conditions of the strategy are met, let's take the trade. Place your buy entry at the close of the doji candle, set your stop loss below the pattern, and stay in the trade until price closes below the 10 simple moving average, which is our exit signal. Now, look at what happens next. As you can see, the market continues moving higher before eventually closing below the 10 simple moving average. That's where we exit the trade. This setup produced an excellent 1-to-5 risk-to-reward ratio. Now, let's look at another chart example. This is the Australian dollar against the Canadian dollar on the 5-minute chart. As you can see, the market is clearly trending downward below the 10 and 20 simple moving averages. We also have a bearish moving average crossover, indicating that the market is likely to continue trending lower. This gives us our first confirmation. Next, price retraces back to the 20 simple moving average and forms a doji candlestick, which is strongly rejected from the moving average. This is our entry signal. Once the doji candle closes, place your sell entry at the close of the candle. Set your stop loss just above the pattern and stay in the trade until price closes above the 10 simple moving average, which is our exit signal. Now, look at what happens next. As you can see, the market continues moving lower before eventually closing above the 10 simple moving average. That's where we exit the trade. This setup produced an excellent 1-to-5 risk-to-reward ratio. Take a look at this chart example. This is the Australian dollar against the Canadian dollar on the 5-minute chart. As you can see, the market is in a clear uptrend. We can identify a well-established trend line by connecting multiple higher swing lows. In this example, the trend line has 4 valid touch points, confirming that it is a strong dynamic support level. Now, look at what happens next. Before the trend line is broken, the 10 simple moving average crosses below the 20 simple moving average, creating a bearish moving average crossover. This is our first confirmation that bullish momentum is weakening and that a potential trend reversal may be underway. Shortly afterward, price breaks below the trend line, providing our entry signal. The combination of the bearish moving average crossover and the trend line breakout significantly increases the probability that sellers are taking control of the market. Enter the trade at the close of the breakout candle and place your stop loss just above the most recent swing high or above the breakout candle. For the exit, remain in the trade until a candle closes above the 10 simple moving average, which signals that bearish momentum is weakening and that the downtrend may be coming to an end. Now, look at what happens next.